Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live. And I wanted to go over with you in this video the formula that I use to phase out of my positions each day as they go my way. For those of you that watch the live stream that I do every day, Monday through Friday during the last hour of the market, you'll often see on my charts, or you'll hear me say, I hit one profit target today, or I hit two profit targets, I hit three profit targets. And in this video, I want to explain the math and the formula that I use in order to come up with the locations that I'm going to take my profits at. I put the limit orders in during the nighttime to take my profits, but I want to go over with you step by step how I actually come up with those particular levels. So I do get questions, people email me and say, Greg, I know you're getting out at these levels. Why are you getting out specifically there? So in this video, that's what I'm going to do. I'm going to show you exactly how I do the math and the formula that I've developed over the years on where to take my profits. I noticed a tweet from my friend and mentor, Stephen Burns, on Twitter. If you don't follow him, at S. Joseph Burns. I can't say enough good things about Stephen Burns. He's just great. So it's a great channel to follow on Twitter. But he did a poll here. What is the most important element for a profitable trade? 17% entry signal, 24% said stop loss, 25% said position size, and 34% said exit strategy for profits. And I couldn't agree more. I'm obsessed in my trading with profit targets and exiting them. So when I saw this, I was like, yep, that sounds about right. So what we're going to do then, I did a few little slides here. So we'll start with the first one here, and then I'll read the slide, talk a little bit about it, and then we'll go to the charts to help put it in context. So I hope that makes sense. All right, I'm going to take off the webcam here and replace it with that. And so, okay, let's get going here. So phasing out of a position as it moves in your favor. So as it moves in your favor, it's starting to become profitable. How do you phase out? Well, there are 3 data points required. And let me switch back over here. So I thought the best example would be an example that I'll be putting in my orders for Monday morning on Verizon. So I bought Verizon back here on the 16th of May. I bought it right here, and as you can see, it started to move my way. Well, in the Friday live stream, I took 3 profit targets on Verizon. So what I'm going to be doing here tonight is I'm going to be showing you how I'm going to be placing my my profit targets for Monday. And you can see I already have them in place. I have 58.48, 58.87, and 59.26. So why and how did I come up with those numbers? So that's what I'm going to show you. So back to the slide. So you need 3 data points in order to figure this out. So the first data point, let me go here. Oh, well, I guess I can't get that. I'm sorry. Let's see. Oh boy. Sorry. All right. The first data point is the price of your ultimate profit target. All right. So the price of your ultimate profit target. So as you can see here, what I have designated as my ultimate profit target is the 6th ATR channel. Here's channel 1, 2, 3, 4, 5, 6. Prices usually have a very difficult time going beyond that. So if it ever gets to that point, I am happy to be 100% completely out of my position. So what you have to do is you have to take the closing price. And now this is every day, because you have to base it from the close of the last day of trading. So on Friday, the close was here. This is my ultimate profit target, 61.63. So the distance between the closing price of Friday and my ultimate profit target of 61.70 is a difference of $3.59. All right, so that's a very important number to have. All right, so let me get my next. The second data point, the price where the stock will be at a 70 RSI or a 50 RSI. So now my charting software allows me to figure out the next day where the 70 RSI is going to be. It's one of the reasons I use Trade Navigator, because I don't know of any other platform that allows you to do this. So if you don't have Trade Navigator, what you could do is you could use, you could look at the RSI here and kind of guesstimate where the 70 would be. It's not as exact. You could just use like the previous high or something like that. If you don't have it, I don't know what to say, but you would just have to estimate where the 70 RSI would be. Take a look at where it was last time. Take a look at where the price was last time, and that will be pretty close. So, but I know exactly where it's going to be because of this tool that I have. So, first thing we look for, where's our ultimate profit target? And then you have to take the distance from the close to that ultimate profit target. And you have that value, $3.59. The second is where your 70 RSI is going to be. Now, I don't really think that the price is going up here, but you'll see in a while why I have to have this number. Because if the price actually got to this 70 RSI here and failed, that's where I would go ahead and lock in my profits. All right, so the third data point is the value of a 0.45 ATR. All right, so what is an ATR? An ATR is the average true range. And when you see these ATR channels right here, from here to here equals 1 ATR. The average true range based on the last 20 days is a value of 1 ATR. That means over the last 20 days, that's the expected move that a stock should have, is 1 ATR. Now, for it to go over 1 ATR is going to be a little tough, because the average, you're bumping up against the average of 1 ATR. So I take the value of 0.45 ATRs. And if you look here, you can see the code that I use, moving average 0.45 of the true range based upon 20 days. And the reason I use a 0.45 is that from the bottom to the next ATR, once it gets above that ATR, it's going to have a little bit of a tough time going above. It's kind of like a moving average. So why do I use 0.45? Well, halfway from this ATR to that ATR, we're going to find some just inherent resistance at the halfway point. So I like to use a 0.45 ATR because it's just a little less than half. And then if I hit 2 profit targets, then I'll be at 0.9 ATR, and that's just a little less than 1 ATR. If I used a half ATR and a 1 ATR, I feel pretty strongly I would not hit as many profit targets as I do, because I'm right there before the inherent resistance above. So, okay. So, oh, sorry, folks. I had these all set up. There we go. So data point 3, value of 0.45 ATRs. Okay, so just to recap, we need the distance to our ultimate profit target. So you would just have to, if you didn't have this tool here, you would just have to say, okay, 61.70 minus the current or the closing price gives me $3.59. Then you have to place where you think the 70 RSI is going to be, and then third, you have to have the value of 0.45 ATR, and the value of the 0.45 ATR is actually 39 cents. So now, once you have all three data points, this is the equation. Take the value of the distance to the ultimate profit target, which we know is $3.59, divided by the value of the 0.45 ATR. And we know the value of the 0.45 ATR is 0.39. So we're going to divide $3.59, we're going to divide 39 cents into that. All right. So $3.59 divided by 0.39 is going to give us the number of phase outs, ATR phase outs, until we get to our ultimate profit target. So on this Verizon experiment, Verizon stock symbol, we'd have 359 divided by 0.39 equals 359 divided by 0.39 equals 9.20 phase outs. All right. So then what we're going to do, then we're going to take that number that we just did, 920, and then divide it into the amount of shares that you are holding. So for example, if I owned 1,000 shares of Verizon, I would take the 1,000 shares, I would divide it by $9.20, because that's the value from our equation, which equals 108.69 shares. Now, obviously, we have to trade a round number, so I would just round that up to 109 shares to be sold at each profit target. So 109 shares to sell if it gets to at the three profit targets above. All right, all right. So then what you do is you take the current price of each day of the closing price of the day, and then you add to it the value of the ATR to find your three profit targets. So we know the value of our ATR was 0.39. So we're going to take the closing price. The closing price was 58.09. 58.09 plus 0.39 equals 58.48. Then we take 58.48 and we add the 0.39 on again. It gives us 58.87. Then we take the 58.87 plus the 0.39 gives us 59.26. And so you can see that is where I put my profit targets based upon that. So 109, was it 109 shares? Yeah, 109 shares. 109 shares at 58.48, 109 shares at 58.87, 109 shares at 59.26. So just to recap, we took the closing price up to where our ultimate profit target is going to be. We take that value and divide 0.39 into it. Okay. Then we take that value and we divide it into the amount of shares that we have, and that will tell us how many shares to get out if it hits our profit target. All right. So, all right. So let's go back. Now, the way I designed this formula is as you get closer to your ultimate profit target, the amount of shares that you will phase out at each profit target will become larger. As you get farther away from the amount of shares that you phase out, it will become smaller. So I designed it that way so that the closer you get to the profit target, the larger amount of shares you're phasing out of. Now, if this moves all the way back down, it moves down, but it still allows me to keep it, then it's a dynamic formula. It will adjust and it will get me out smaller and smaller when I'm further away to give me more room to move. The closer it gets to my profit target, the larger amount of shares, because it kind of makes sense, right? The closer you get to your profit target, the more shares you want to be selling. So I hope that makes sense. Let's see. Oh boy, sorry folks. All right. So just kind of a recap with Verizon here. I have 1,000 shares. I know that I have 9.20 ATRs based upon our formula that we just did. I then take 920 divided into 1,000 shares, and it tells me to sell 109 shares, this price, and that price. So now, I picked this particular ultimate profit target up here because we are in a trend type of trade. It's going our way. If I switch this to, let's take another trade that I have right now. So here's another trade that I have. Well, my ultimate profit target on this is probably here to this first ATR channel. And we were talking earlier about estimating where the 50 RSI is going to be. So, with my tool here, I can say, okay, it's going to be the 50. I know for sure that the 50 RSI is going to be right here where this blue line is. Now, if you don't have this, you could probably just go ahead and use the 50-day moving average. So I have to place a point where is my ultimate profit target. I also have to place where my 50 RSI is going to be, because if we come up here, reject that 50 RSI, I'm just going to get out. But see, with me phasing, if the stock keeps moving up and I base all my numbers upon here, I will be out by the time it gets here, and it may continue higher. So I want to give myself a little leeway to the upside. So that's why I mark where the 50 RSI is or the 70 RSI is, but then I have my ultimate profit target, because if it gets up to here, I still want to have some shares if it keeps moving. And the other reason, if I based everything upon just right here, by the time I got out here, I would be getting out of so many shares that I'm not allowing profits to run for me because I'm taking them too quickly. So again, you have to figure out where your ultimate profit target is going to be. You have to figure out where the 50 or the 70 RSI is going to be, because that's really where, if the price gets up there and fails, you're going to be getting out. So in this particular situation, I bought here on the 15th of May. I did hit 2 profit targets based upon what we were just talking about. Did not hit a profit target on Friday. And then it closed here. So just real quickly, I'll show you exactly how I do this. So I know the 50 RSI is here. This is my ultimate profit target. I go from the close to my ultimate profit target. Okay. And I'll put the calculator over here so you can see. So I have $2.32. Now, what's our formula? You have to take that distance, you have to divide it by what the 0.45 ATR rating is going to be, and that's 51 cents. So $2.32 divided by the value of the 0.45 ATR, 0.51, 4.45 phase outs until I get to my profit. 54 phase outs until I get to my profit target. So now that we have that number, what do we do with it? Well, we have to divide it into the amount of shares we have. So if I have 1,000 shares, I divide it by 4.54. That tells me it's 220.26. So I would round down to 220. That's telling me at my profit targets, I should be getting out of 220 shares at each profit target. And then the next thing we do is then we have to set our profit targets. So we have to take the closing price, which is 45.70, plus the value of the 0.45 ATRs. And if you add those two together, you get 46.21. If you add 46.21 to 0.51, you get 46.72. And if you take 46.72 and add 0.51, you get out of 47. Your last profit target is 47.23. So based upon 1,000 shares, at my first profit target, I get out of 22%, then another 22%, then another 22%. Now, the reason this is kind of a large percentage of 22 is because this is a counter trend trade. And I've based my profit targets closer, so it makes the amount of shares that I get out larger. Now, if this were a trade on Verizon, for example, my profit target is much, much, much higher. And this formula told me to get out of 109 shares. Well, that's only 10.9%, right, at each profit target. Where on the DDM, we just ran those numbers, I'm getting out of 22%. But that's by design, because when I'm in a counter trend mode, I want to take a larger percentage off because I'm going against the trend. When I'm going with Verizon, I want to get out a smaller percentage of my shares because it has the ability to run up and trend higher. So I hope that makes sense. Yeah. So let's take a look at Facebook, for example. So again, when you first do this, you have to pick your ultimate profit target. My ultimate profit target up here is the 6th ATR channel. I'd be very happy to get out there. I'm sure you would agree. My 70 RSI, I know for my tool here, is 202.60. So what do? I go from the current close. I go from the current close of the day up to my ultimate profit target. That's 28.45 points. Then what do? We take that number and we divide the number of the 0.45 into that number. Well, that number that's going to be 28.45 divided by 2.24. That gives me a reading of 12.70 profit targets. Now, we take the amount of shares we have divided by that number. That's telling me I should get out of 78.74 shares, or just round up to 79 shares. And what do we do with that? We take the current price, 185.30. We add 224 to it. That's our first profit target. We take 187.54. We add 224 to it. We get 189.78. And then we take that number, we add 224 to it, we get 19.02. Now, because this is a trend trade, I won't be getting out of 22%, right? I should be getting out of much less. And what is that? Well, 79 divided by 1,000, I'm only getting out of 7.9% of my shares at each particular profit target. So a lot of times on the live stream, you'll hear me say, okay, I hit 2 profit targets. I got out of like 24%, or I got out of 20%, because I'm getting out between 10 and 12 about 10 to 12% on a trend trade. But when I'm in a counter trend trade, I'm probably getting out of double that. I'm probably getting it out of 20% at each point. Let's take a look at Visa. So let me show you how this works if you are going short. So I did short Visa on Friday afternoon. So what's the first thing I want to do? First thing I want to do is I want to identify my ultimate profit target. So we're going short. So where would be my ultimate profit target? Well, maybe this 50-day upward moving average would be my ultimate profit target. Okay, I don't really think it's going to there, but I have to pick a level where if it did go there, I would be super happy to get out. Okay, so then we go from the closing price of the day down to the ultimate profit target. That's step one. Step two is I have to figure out where the 50 RSI is going to be. And with my little tool, I can tell it's going to be right here at 159.80. If I didn't have this tool, I would probably just look back to where the previous 50-day was, call it right there, and you can see that they're pretty close. So this is my ultimate profit target. This is my most likely profit target to get out of. If it hits that and rejects it, goes back up. So this is my most likely profit target. This is my ultimate profit target. Okay, so now that we have both of those established, what do? We have to take this number from the close to our ultimate profit target. Remember, this is going to change every day, so this is why I have to do this every day. But the close on Friday to where my ultimate profit target is going to be $5.93. And then what do we do with that? We go $5.93, and then we divide the 0.45 ATR value into it, which is $1.27. So 5.93 divided by 1.27, that gives me 4.66 phase outs based upon those parameters. So that's a pretty small number. That means the amount of shares I'm going to be getting out of are going to be larger percentage-wise. So $4 or 4.66. So again, if we have 1,000 shares divided by 4.66, the formula is telling me I need to get out of 214.59. So I would just round that up to 215 shares. And where do I get out of 215 shares? Well, in this case, you take the price 164.09 minus the 0.45 number, which is $1.27. That gives you your first profit target at 162.82, and you take that number minus the 127, 161.55. You take 161.55 minus the 127, and the last profit target then is 160.28. And I will be getting out of 215 shares here, 215 shares here, 215 shares here. And as we know, if you just take 215 into 1,000, we'll be getting out of 21% at each profit target. And the reason this is so high is that this is a counter trend trade, because this is not this. We are trading counter to the actual trend of this trade. Just like if you're, just like back on DDM, this is not an uptrend. This is a downtrend. Therefore, my profit target is closer. On Visa, this is in an uptrend. Therefore, my profit target is closer. Verizon, on the other hand, is in a setup where it looks likely that it could trend for a while, and therefore my profit target is higher, and therefore based upon the formula, the amount of shares that I will get out percentage-wise at each profit target will be smaller. So I hope that makes sense. I know it sounds a little difficult, but it's really not. Just to run through one more time, first thing you have to do is determine where your ultimate profit target is going to be. So we'll just run through it one more time. From the close up to your ultimate profit target, that's step one. Step 2 is identify where your 70 RSI is going to be, or your 50 RSI if you're in a counter trend trade. But if you're in a trend trade, identify where your 70 RSI is going to be, because you're going to need that for future reference. Then you take from the close to your ultimate profit target, divide the value of the 0.45 ATR into it. So in this particular case, it's 3.6 divided by 0.39. That means I'm going to be getting out 9.23 phases to my ultimate profit target. You then take the amount of shares that you have, not initially, but what you have left at that time, and let's just say it's 1,000, and divide it by that 9.2 whatever number, and that tells you how many shares you're going to get, you're going to get out of. So I know I'm going to round up here to 109 shares. And then where do I tell the system to get out of those 109 shares? You take the closing price, add the ATR to it, that's profit target 1. You take that value, add the ATR value to it, that's profit 2. Take that value, add the 0.39, which is the 0.45 ATR value, and that gives you your third profit target. Now, again, you have to do this every day. They're going to change every day, and it's a lot of work. Frankly, it's a lot of work, especially if you have 4, 5, 6 positions. But I think it is worth. Work worth doing. I can't tell you what a big difference ever since I've developed this formula it's had in my trading, because see, a lot of times people will key off of, let's just go back over to DDM. A lot of times people that buy, they're in the same trade as you, they are going to be keying off of one particular level. And the blue line here is the 50 RSI, right? 46.81. A lot of people are keying just off that level. I am going from the close of each day, and I'm hitting little profit targets that is not on anyone's radar whatsoever. And I believe that's why my winning percentage is so good, because I do this. And, like I said, I've developed this over years. I'm obsessed with profit targets and getting out. I don't like to ride something a very, very long time and then give it all the way back. I mean, let's just take an example of Apple. If I bought Apple, just say we bought it above the 200-day moving average, and then we got out when it went under. Well, here, this would have been a loss, and you got back in. Now, if you would have used a static 200-day moving average, you would have gone through this entire nice big up move only to give it all back. I just can't do that. Some people can, it works fine for them. But in this, using my phase out formula, I would have always been targeting up here, the 6 ATR channel, as my ultimate profit target. Got pretty close. By the time it got out of here, I'd probably be 100% out of the position, and I would not have had to go down through that. So anyway, I hope that makes sense. And as you can see, going forward for Monday, I have done all this math, and here's my profit targets on DDM here, and here. Facebook, we talked about it. My profit targets are there, and there. AT&T. For Monday here, and here. So, when you listen to the live stream and you hear me talking about hitting profit targets, hopefully this will shed a little bit of light on how I come up with those levels and how I come up with how many shares that I'm going to sell at each level. And if you have any other questions, feel free to email me. My email is in the description of this video. And I know this is kind of a tough one to get your head around, but it's actually really quite simple. Maybe watch the video a couple times and you'll see, but I tried to lay it out just as simple as I could, as simply as I could. But if you do have questions and not sure, just feel free to drop me a line, and I will do my best to explain it. And I also should mention here at the end that I do offer private one-on-one coaching, mentoring, and teaching sessions in the evening time via Skype. So if that's of interest to you, again, my email's in the description of this video, and also my hourly rates. But I've had really good success with my students. You know, I treat each student equally, regardless of how much money they have or what kind of account they have. I just want to help them develop and design a trading approach that is going to work for them and be beneficial in their life. So if I could help you with that, if you have any questions about that, feel free to email me as well. So that's about it. That's how I phase out of my positions and the formula that I've developed over the years. So thanks everybody for coming by. And if you haven't caught the live stream, please join us. It's Monday through Friday during the last hour of the market. And we go through my watch list. We go through the positions that I have, why I got in something, what I'm going to do with it moving forward, how I'm going to manage the trade, looking at the watch list, seeing if there's any trades that are interesting that day. So anyway, I hope this helps. And like I said, if any questions, feel free to email me. And I hope you have a good rest of your weekend, and hope to see you on Monday. Thanks, folks.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.